Hello everyone, this is Steve with the Free Bullion Investment Guide. Today is June 15th and I'm doing a review and outlook for the price of gold. This is gold's daily chart, and in review of last week's video I had shown you this rising wedge pattern. It is a negative pattern and gold did break below it as expected early last week. It really just consolidated in price before it continued to move higher. It was in oversold territory, as we can see in the MACD and the RSI, and it, as I said, it consolidated and it continued to move higher, really because there's nothing holding gold down right now. There are some resistance levels holding gold down, but as far as in the news, there isn't much. We've had the conflict with Iran come out this week, as well as the trade war doesn't seem to be ending anytime soon, and the Fed keeps on releasing news that they're thinking more about lowering rates than raising rates. Now, the Fed's meeting is on June 19th, I believe, which is this Wednesday. They'll be releasing a statement, and I believe Jerome Powell also have a press conference. However, I don't think they're going to lower rates at this meeting. I think they're going to keep rates the same, and they're going to wait until I think they want to see another jobs report before they decide to lower rates anymore. So that's the reason. That's my thinking with the Fed's what the Fed's going to announce this week. Now, I am still showing for gold's outlook a negative pattern, and that's really what I expect this week. I expect for the price. Let me move to the 4-hour chart and to better narrate to you what I'm seeing in the charts. So we have this rising wedge pattern in gold's price chart. This is the 4-hour chart I'm on now. And what I'm expecting for gold is for us to see more consolidation. I expect this pattern to be broken to the downside or while gold consolidates. Now, like I just said, I expect the Fed not to raise rates at this meeting, so we'll likely see it drop in price. However, there isn't, that's all that there is as far as weight or gravity holding gold down, because there isn't much else with the trade war and Iran, the unknowns with that. And with the Fed will likely lower rates. Let me see here. The yield curve is not looking any better, and the 3-month is the yield on the 3-month is getting closer and closer to the yield on the 30-year. And if those numbers invert, then the markets will freak out. And the last thing the Fed wants to be is responsible for another recession. So and that will likely cause a sell-off if we see an inversion of the yield curve. So I expect the Fed to lower rates. I just think they want to see what happens at the G20, as well as see another jobs report before they lower rates to confirm that the market is slowing down or that the trade war is affecting the market. So that's the reason why I expect gold to fall to the downside, break this pattern. However, I expect it to continue to either move sideways or to slowly rise and break above 1350. And I expect the 1350 level, which has been a strong resistance level, to become a strong support level for gold with all the uncertainties in the market. So that's my outlook for gold. I thank you for your time. Take care, and God bless.